Yes, Joyce, can you hear me? Yes. Yes, hi, you've got me. Okay, thank you. Well, thank you. I'm out here live in the heart of the storm, ready to report on the weather today, whatever you guys need. What's that? You just want to know my trading strategy? There's a lot of YouTube comments asking for it. It's a hurricane. You don't want that? All right. Let's do it. All right, hello everybody. So yes, I am giving in. I'm finally making a video today. This video about my trading strategy. I'm going to try and go through it in as much detail as possible to make it as easy to understand for maybe those who don't understand or quite get what I'm doing. But a couple of things before we get into the actual strategy today. One, this is not financial advice. Nothing I am doing or saying is telling you to buy or sell any individual stock. 2, day trading is risky. There's a high probability that if you trade, you will lose. I don't suggest doing it. If anything, I suggest finding a financial advisor and investing your money, but that's not really what this channel is all about. So 3, there is no possible way that I can explain every little detail of my strategy and experience using it to you. So I'm going to go over the base idea of it, but know that there's a lot more time and experience and screen availability built into it that may not be 100% cut and dry with every trade that I take out there. And then 3, please remember that in my opinion, there's 1,000 different ways to make money in the stock market, and there's only one right way to make money, and that's the one that works for you. So if my strategy doesn't work for you, that's fine. Find another way to make money in the market, but it works for me. So we're going to break it down in this video, my day trading strategy. Let's go. All right, so what is the basic idea behind my strategy? Well, it's finding stocks that are making intense moves either up or down and taking a high probability position that it's going to reverse back in the opposite direction. So if you look at the screen here, this is just a recent one. It wasn't a big trade here on LVTX, but you can see it made this big move here at about 10.50 from 4.50 all the way up to $5, which on a $4 stock is a pretty decent move. And I shorted the top there just below 5 and then covered as it came back down along the way. So the basic idea behind it is I'm looking for intense moves. This is not just something that's extended. It's something that's extended. It moved really fast, really quickly, and it made the big move. There's a bunch of other requirements that we'll break down a little bit later in the video, but this is the basis of the strategy. Now, the most important part, and one that people think doesn't matter, but the number one requirement to start trading this way, how I do, is to have the intensity stock watch scanner. You cannot find these same trades without the scanner. It is a proprietary scanner that has a proprietary algorithm behind it that finds not just stocks that are making intense or making moves or maybe extended, but it's finding ones that are making intense move with volume. You can have it set so you're either looking for through the highs of the day or an intra-range move, if you want to call it, and then it compares it to all the other stocks out there in the market to see if it is an intense move compared to it, and then it gives you a number rating value, the I cubed number, which tells you and gives you the official alert. We'll break all that down a little bit later, but that's the basis behind the strategy. And step 1 is to get the intensity stock watch scanner. I could not trade the way I do without it. Of course, I do have an affiliation with them. They are my biggest supporter, and you guys get to benefit off of that. If you do choose to sign up with them, you can use the link down in the description below. Use that link, use my code GDTISW, GDTISW, that's Garage Day Trader Intention Stock Watch, GDTISW, and depending on which package you choose, you'll get 20 to 30% off your subscription every single month, not just your first month, that's every single month that you are with the program. Okay, so what is the thesis? What is the theory behind the intensity indicator? Why does it work? Well, it's basically this curve right here. So you can see it's based highly on emotions, and if you have done any looking into day trading, you know that it's pretty much all emotions. Is how everyone trades, whether they're successful or whether they are not successful. So this indicator identifies extreme intensity events in real time. It alerts you before the reversal happens to give you time to make a trade plan and find your entries and exits, and it does it for both long and short opportunities. So their motto is buy fear, sell euphoria, basically playing off of emotions. Let's go ahead and look at the curve here, why it works. So if we start at the beginning, we start with optimism as the stock, and this is the yellow line is the movement of the stock up and down. So it starts with optimism. It starts going up a little bit more. We hit excitement. Oh my God, it's still going up. We're in thrill. We're thrilled. That's where people start to FOMO in. This is where they start to hit the buy button, the FOMO. Oh my God, I'm going to miss the move. That's what this red box here is. And then once we get through that move, we're at extreme euphoria. Everything has started to go in everyone's direction. And oh gosh, this is where the intensity scanner alerts you. This is where there's the maximum downside possible because it's made this extreme move already. And as it starts to pull over, the emotions are going to start going back in the opposite direction. So that thrill, that euphoria, as we start to slowly come down, it starts to come into anxiety. Oh gosh, is this thing going to come back up? Is it going to keep going? We get down into the denial, fear. Oh my gosh, there's no way. It can't possibly come all the way back down after it made that move. There's no way. It continues to go. Desperation. Oh my gosh, I've got to buy a little bit more. I got to get my average down a little bit. I have to do it. Oh my gosh, it keeps going. Panic. People start panicking at this point. So you can see what has happened to the stock. And now people are selling all their positions. They're panicking. They don't know what to do. If they were in up here, they have now sold out down here. They've lost money. If they are, maybe they were holding it longer term and it starts to make this kind of downward move, they start to experience these emotions and they start to sell it off here. Well, what has now happened in the opposite direction? It's done the exact same thing in the opposite direction. Most traders have sold here below the panic zone. That's where the intensity indicator starts to alert for an upside move, the maximum upside potential. So that's where we start to get long. And then that's where the curve starts all over again. As it rises up, oh gosh, there's some hope, there's some relief, there's some optimism, and then the curve starts all over again. So that's the theory, that's the thesis behind why my strategy works and why it works the way it does. Obviously, there's always black swans. Not everything is going to work 100% of the time, but the emotions behind it are why it works. Okay, the next part of the strategy we have to talk about is the risk-reward ratio, the triple R's. So this is basically how much you're winning versus how much you're losing versus your winning percentage. So all three of those you need to include in determining whether you are able to be profitable with a strategy or not. Not just risk reward, you have to include the win percent ratio in there as well. The traditional risk reward ratio is a ratio of 1-to-1 where you're risking the same exact amount that you're willing to win. So if you're risking $50, you're winning $50 on a trade, and your goal is to win over 50% of the time. And if you win over 50% of the time, obviously minus commissions and all that, you will be profitable with that strategy. Another way of making money using the risk reward ratio is if you have a low risk reward ratio, meaning that you're having low risk, high reward on your trades, but you may lose way more often than you win on a given trade. So in this example, your ratio is going to be over 1-to-1 and your win rate is going to vary based on the strategy. But say, for example, you only win on 25% of your trades. So you're winning 1 out of every 4 trades, but your average winner is 6 times bigger than your average loser. With this type of risk reward ratio, you're still profitable. So with those two examples being said, we now get to what my strategy risk reward ratio is. And this is where a lot of people get caught up, get confused, don't like it, leave negative comments, because it is built into my strategy that my losers can be way bigger than my winners and I will still be profitable using it. Well, how is this possible? Like I said, you have to use your risk reward ratio. In my case, it's under 1-to-1. That doesn't mean it's always like that. That just means that's what I'm willing for it to be. And then you have to know your win rate, and that's going to be obviously varying based on the trader. So you need to be able to figure out what your win percentage per trade is. Once you know your win percentage, you can then, figure out how much you can risk at your max potential loss on any given trade and still make the strategy profitable. So for me, my winning percentage is over 90%. So I win over 90% of the time using this strategy, which means my one loser can be up to 10 times bigger than one of my winners, and I will still be profitable overall because of the amount that I'm winning compared to the amount of times that I am losing. Now, I say can. That doesn't mean that if you have a loser, it will be that max loss potential. You guys have seen on my channel, there are several times I will take a losing trades that is nowhere near that kind of ratio of the max loss that I'm looking for. And as long as you are able to control your win percent to max loss ratio, you will always be profitable if you know your winning percentage, and you can do that over a course of time. All right, so now we're going to get into how I implement the system itself when I'm actually taking the trades. And remember, this is just the very base system. I have all kinds of different things that I do and modify as I go based on what I'm seeing, based on my experience trading this strategy over multiple years and being in the market over multiple years. But we're going to break down the basics of the entry system here. So step one is you get your scanner alert from the Intensity Stockwatch scanner. I don't get official alerts until the I cubed number hits over 20, but I will start looking at them when they get up into the teens. That's kind of when I start pulling up the chart, checking it out, and creating a game plan. Step two, check things like the volume, daily chart levels, all that kind of stuff, float, all that matters. I don't want to trade something that's got extremely low volume on the day, that's going to be really hard to move, possibly really spready. If it's something that's making a big upside move that I'm looking at potentially shorting, I don't want to look at the daily chart and see that it just gapped down 30% the prior day, because then it's bouncing off of that already huge move to the downside, and it's got tons of room for a bounce back up to the upside that would make it much more difficult to properly predict what's going to happen on the price action. So you want to check volume, check float. I generally try to stay away from the super low floaters that have the halt potential. You guys will still see me get into them sometimes, but generally I try to stay away from those. And chart levels, volume, all that kind of good stuff. You want to make sure that you're checking your individual broker's availability of shares if you're shorting, if there's any kind of margin restrictions on that particular stock that you're looking at, and so forth. Now, generally, if the stock's moving, you're going to have a pretty good idea based on what the stock is, and you should be able to do all this very quickly, because a lot of the trades I take, and you'll see in the examples coming up, are very quick, and all these steps, once you get the hang of it, are done extremely quickly when you get the scanner alert. So step 3 is to check the candle ranges. So a lot of people wonder if I base my size off of price of the stock alone, and the answer is absolutely not. Most of the times the size, except for the super high priced ones where obviously buying power becomes an issue, most of the times the size that I choose in any given trade is based on the range of the candles. I use 1 minute candles, so I'm looking at the range of the candles. If it made a 50-cent move in that 1 minute candle, that is the range of one candle. So I'm using the range of the candles not only to determine the share size I'm going to take, but also to determine where this could possibly go looking at it, because remember, the scanner is designed to give you the alert before it does the reversal. If it alerts you as it was doing it, or too late then, or after, then it would be kind of pointless and no good. So you have to be able to look at the alert, the volume, the chart levels, the candle ranges, and come up with a game plan for your entry system as it's happening. So I will look at the ranges, figure out where I think it could possibly go to, and kind of figure out where my entry levels will be above that. So that's step 4, creating your entry game plan. Now, my base entry system is a 1-1-2 entry system. Now, what this means is that if the stock is going up, and I'm thinking about shorting it, the first time I hit the short button is going to be for one standard of shares, one block of shares. So say I'm using 100 share blocks, it's going to be 100. If it continues to go up further to my next entry level that I'm looking at getting into, that's going to be another 100 shares. So now I'm up to 200 shares. And then finally, if it goes up even further than that to where I've planned for my final entry, that's going to be a 200 share block. This helps you get your average up. It gets your bulk of your shares in at the best price and makes it easier for you to make money as you go. So that's the 1, 1, 2. In this example, it's 100 shares, 100 shares, 200 shares, getting you to a total of 400 shares that I would be in for that trade. And then since you knew around at least where you're going to have those entries and you knew what your share size was going to be, this is how you can determine your max loss potential. Now, it's always going to be a roundabout with this strategy. It's not going to be exactly set because it doesn't always move perfectly, and that's how the market is. So you just got to kind of get a roundabout where you want to be, and you'll be just fine. And then you get to step 5, which is watching the price action. I like level 2 and time and sales. Other people watch just the action on the chart, and they call it the jiggle in the room, where the stock makes a big move up and then it kind of just gets stuck and it jiggles in one spot. I basically use the same thing, but I look at that via level 2 and time and sales. When I see it shooting up, shooting up, shooting up, and then it gets stuck at a certain level for a while, and you see it sitting right there, that's generally where I'm going to be looking for an entry. So watch the action, execute the plan. Now, for an example here, I generally like to work around whole dollar and half dollars just because for me they're a lot easier to predict, and it's a lot easier to kind of make your entry game plan around there of where you want your entries to be. So I like to maybe, if it just pops through a whole number, maybe get a 20-cent move above that whole number. And then if I'm looking at 50-cent ranges, then I'll be looking for a pop through the 50-cent move above that. And then the final ad would be a pop through the next whole number for that final ad before we start to see it start coming back down. So that is the system basics on the entry game plan. Let's go ahead and look at an example of that right now. All right, so first example here, step 1. You can see AFRM hitting up into the 20s here. That's when it starts getting highlighted there in that orangish yellow. Now, what is step 2? I'm checking the volume. I know AFRM. I know this stock. It's got good volume on the day, good float, plenty to borrow, all that stuff. Looking at the range of the candles, look at this. It's making multiple points here on each range of this candle. So at this point, that means to me that this is going to be a smaller size entry here just because of the range of the candles. And so I'm in there at 176. Wouldn't have been looking to get into this one now until over 178 again. So that's creating the game plan here based on those candles. You can see the candle before this went from 173 almost all the way to 175, so about a 2-point range there. So I was not going to look to add into this one unless we get up through 178, and then 180 above that would have been the final entry. But as it starts coming back down, I take a partial here just at 1 point because I was in small on it. Really should have been doing better. Should have been looking for at least 2 points here on the way back down. But you know, it is what it is. When you're making money, sometimes you don't always do the right thing. But here it is, you know, moments later, we're now back down to that 2-point pullback there. So would have been much better to start taking it off there at the 2 points rather than at the 1 point. But you can see how quickly you go through the steps here while you're doing this. So you get that scanner alert, you check all the criteria of the stock, you check the range of it, you create the game plan, and then once you see it starting to make that move, you execute the game plan. So as you saw it start to speed up real crazy there at the top, that's when it got the highest scanner alert. That's when I entered there at 176 with the game plan being at in 178, and then the 2 would be over 180 if it got up to that point, and executed it and made some money. Now here's an example of one that's a little bit lower price. You can see this one's alerting on the scanner as well. This time a pretty big number of a 50. This one's a little bit lower on the float at 9 million, so I'm going to be taking this one smaller size because of that. And the range in this one is only about, you know, 50 cents or so on this overall move. You can see this move started from the pop of 430, and it's only about a 50-cent move. So if it wasn't for the float, this could definitely be a bigger starter on the entry size here, but because of that float, I believe I started this one pretty small as well. Now on this one, like I said, I like to use whole numbers and half numbers. So on this one, I front ran the whole number of $5 a bit, just thinking that would be probably a pretty good area of where it might hit and then start to fade off down from there. So based on that, that's where I got in, and then the game plan above that would probably be 25-cent intervals. So based on the range of the candles here, the ad would then have been over 525 if it continued, and then the final ad up over 550. That $half number made it pretty easy to spread where those entries would have been out on the game plan from there. So now I'm going to be looking for about a 25-cent pullback here, so waiting to see if it can get down through 470 before I start to piece this one out as well. I don't remember how many shares I had here, but there's the move down there. And so you can kind of see on these two examples what we're doing. Okay, so now let's take it slow and look at a chart that, in my opinion, is a perfect example of a game plan and entry system. So we're looking at NIO here. I don't remember when this was. This was sometime over the summer, over the last couple months, I believe. But let's look at what's happening here. So this is just a picture of it, so I don't unfortunately have what the scanner was alerting, but this was a scanner alert, so step one in the books. We checked the volume. Volume's good, float's good, share availability is good on this. I know NIO. I've seen NIO a million times. I know all that's good, and there's, based on your platform, you can just glance and see what that stuff is. So now, what are the range of the candles here? Well, this is right at the beginning in the open of the day. So we started at around, 1850, and then it started alerting as we were pushing up into 19. So that's like a 50-cent range over 2 or 3 candles there. So I'm looking at basically a 50-cent range on the entry game plan system. So and that's how you're basing your total shares that you're willing to get into it. So you have to think when you're planning your share size, okay, this is going to be 50 cents higher or more when I get my final ad in. So what am I willing to get my total shares up to by the time it's up to that price level? So in this case, I decided I was okay getting my shares up to a total of 800. So that's why I started with 200. So that way you're a 1-1-2 entry system. So 200, 200, and then 400 if you get to your final ad to get to your total shares of 800 shares. So now I talked about how I like whole number and half dollar marks when doing entries because it makes things a lot easier to calculate where your entries are. So I've already determined that my range is going to be approximately 50 cents. I know what my share size is going to be. Now I just have to split that up as we go. So you can see the first entry here is just as it gets through that whole number. 1902 is the first entry on that first red dot there at 934. About a minute later, what am I doing to find where I want my second entry? Well, I'm looking for at least 25 cents to split that 50 cent in half. So I'm looking for through 1925. That doesn't mean the second that it hits 1925, I'm going to click the button. I'm still watching the level 2, the time and sales, waiting to see what the price action is doing. And that's where a lot of this strategy is being able to read the price action, see what the stock's doing, be able to kind of pick and choose your entries as you go and not be super rigid with it. It's a lot more artistry kind of to it than you would think. So, but with that being said, at least 1925 is going to be the ad in there. So you see a minute later, I get a little bit higher than that, do a little bit better, get 1930. So that's going to help me with my average. It's going to make my average bump up higher here as we go. And then, of course, I'm going to be looking through 1950, which is another 25 cent, that second 25 cent of that 50 cent range that I'm working with. And it's that half dollar mark between 19 and 20. So I've got pretty much everything working for me there in my favor. And then look at that entry there, 1952. Looks like, if not a top tick, almost a top tick there on that final entry. So I've now got 800 shares and my average is up much higher at this point. Okay, so I'm in 800 shares. I've got all of my entries in there now. So now the question is basically, say this wanted to keep going. Where is my stop going to be on this if it wants to keep going and does not give the pullback? Say it's a black swan, just one that for whatever reason is not going to work. Where's my stop going to be? Well, you can determine that a few ways. It's kind of going to be up to you. Generally, I like to keep it as close to my final entry as possible. That way, with your most amount of shares, you're losing the least. But say it just kept going. You know, you're just gonna have to draw a line in the sand somewhere. Either one, have a max loss set in your broker that you can't go over that no matter what, it kicks you out of the trade. Or two, you know, in this case, I probably would have picked 1980 just because that would have been another half of the move there of the 50-cent range. So if it went up and made that 25-cent move again, hit 1980, probably could have stopped out there. Worst case scenario, stop out if it gets up through the whole number of 20 and, you know, go from there. But in this case, we can see that it started coming back down. So ideally, you're going to get your covers below all the entries, but sometimes that's really hard. So if you're in all three, I like to get my covers at least below the top two, because that means I'm definitely into the money and making money with 3/4 of the shares that I have, while covering out the first entries that I got at just a small loss. So take a partial there, try and let it go lower. You know, take some money when you have it, try and let your shares drop lower then as you go, and try and make more money, you know, from there. So you can see my first cover here was 1914. I decided to take 3/4 of the position off there, so it took 600 to the 800 shares off there at 1914. Took another 100 off at 1905. That was kind of just front running the whole number again, working off the whole numbers, just this time on the way back down. And then it finally made a move below that. It took another 50 shares off at 1891. So at this point, I'm down to 50 shares, and I'm hoping, who knows, maybe this is one of those ones that just fades off and dies the rest of the day and comes all the way back down to 18. But in this case, it didn't. So once it came back up and was pushing kind of the tops of some of these recent candles here, that's where I stopped out, and still had a really nice trade there. Made $178 on that NIO trade. And that is how I break down my entry system, come up with my game plan, figure out around about where my loss is going to be. If it's a losing trade, figure out my share size, my entries, and that is how I trade my strategy. Warning! The next part I'm about to talk about is the hardest part of trading this strategy. And it kind of goes hand in hand with why the strategy works so well. It's because you get so used to winning. Why is that a bad thing? You were like, that doesn't sound bad at all. Well, it can be. You get so used to winning that when one of these black swans, one of these ones that just wants to go forever, and you get it wrong, comes around, that you get stubborn, and one, you don't cut it where you're supposed to. Two, maybe you just keep adding in, hoping that it's going to come down, and you abandon your strategy completely because you've gotten so used to winning that you just feel invincible and like it has to come down after you've gotten into it. You get so used to it working all the time that you abandon your plan, you abandon all your risk measurements, and you end up having a huge trade that for a loss. It's happened to me. It's happened to pretty much most people who I know that trade similar to me. You have to be able to control yourself, be prepared every single trade for that one that's going to just go crazy and not work out. You have to be ready for it. So that is the warning, the caution of if you're going to try this strategy, the big, oh my gosh, be prepared. This is how you could really lose big using the strategy if you abandon it. The strategy itself works and is sound, but if you abandon it when one of these comes around, it can hurt big time. Okay, so you've decided you want to try trading a strategy similar to what I do. How do you go about getting started? Well, obviously, first you have to sign up for the Intensity Stockwatch Scanners because you ain't going to have the same alerts that I have and find the same stocks that I do without it. Secondly, please, 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 paper trade. At least 2 months. It took me, when I first switched over to this and started using the scanner in the new strategy, it took me at least 2 months before I really understood everything it was telling me and showing me with the alerts and all the information that it gives you. It took me at least 2 months before I really started to get it, because when you first start doing it, you're going to see the alerts and you're going to pull it up, but you're not going to fully understand everything at first. So spend at least 2 months with the scanner every day, trading, watching the alerts, paper trading the alerts, so that you can understand what it's telling you. Also, in the same time, working on your system. You have to be able to perfect and get your system down before you ever try to trade real money, really with any strategy, of course, but especially with this one as well. So get the scanner, paper trade at least 2 months. If If after 2 months you have good results, then you can start trying to implement it very small size and move on from there. Now, along with that, you're going to need to know what your risk reward ratio is throughout your paper trading experience. That has to at least be there for you to know that you can make this a profitable strategy. So how are you going to figure that out? Well, I suggest using the following. A trading journal. Pretty simple. You need a trading journal to track all of your stats, track all of your trades, and by far the best trading journal out there, and I don't even think it's close right now, is TraderSync. TraderSync is going to give you all the information you need to know, and all you have to do is populate your trades into there. You can either do it manually, or pretty much almost every big broker is supported that you can just download a file and upload it into TraderSync that doesn't have any of your personal information in it. It just contains the trade information so that it can then log each trade, show you your risk reward ratio. That is all important, and then you can go back. It automatically makes charts for you in there. You can see what your winning percentage is. You could put notes on everyone, put your setup in there, you know, write down if there was something you did wrong on it, and go from there. If you want to try it, there's a link down in the description below. You can try it absolutely free for 7 days, but I highly suggest having this because you're gonna need this, and you're gonna need that information to know what your risk reward ratio is, to know what your max loss potential and what your winners need to be on average in order to make the strategy work. So I hope that helps. That is the very basics of my strategy broken down the best way that I could think to do it. Still took me over 30 minutes on this video just to break down the absolute basics of what I do. Like I said, this is the baseline. If you're going to try and do it, go ahead, go in and make it your own. Change up things. Do things that you think might be better, works better for you. Tailor it to your personality. This thing can be used for stocks. I use it for options. I do the same thing when I trade options using this strategy. It can be tailored so many different ways. Sometimes I'll do more than a 1-1-2, but I'll plan for that ahead of time, and I'll go a little bit smaller along the way because maybe I'm not convinced on exactly what the range is going to be. So there's so many things you can do with this to customize it to you, to your personality, and to make it work. This is just a breakdown of the basis behind my strategy. If you were just to ask me, give me what your strategy is in 5 minutes, I'd say, well, I need 30, and this is what it is. So that's it. Hopefully you guys enjoyed this video. I've had so many comments asking for me to make this video, and I held off for doing it a long time just because I don't want somebody to go out there and try and do it and lose money and then blame me for it. Don't trade like I do. Trading's your own. Go figure it out for yourself. Don't be a follower, but this is how I do it. Hopefully you guys enjoyed the video. Hit that like and subscribe. This video took me forever to make, so please hit like and subscribe. I'll see you in the next one.